Hello. Thanks again for joining us on our latest edition. Welcome to the show. My name is Bill Fairman, and this is
Wendy Sweet,
my lovely sister and business partner. So we're going to talk today, and first of all, like and subscribe. We need likes. We need you to subscribe to our show. Our website, by the way, is carolinahardmoney.com. So in this episode, we're going to talk about the differences between a hard money loan and a bank loan. And while they're both necessary, at what parts or place in time are they necessary?
Right. Well, people ask me that all the time. Why would I not get a conventional loan? First of all, you need to understand what a hard money loan is, right? So hard money is a short-term, high-interest loan that allows the borrower to buy a property and fix it up. So the way the hard money loans work is they are based off of what the after repaired value would be, not what you're purchasing it for, but what the after repaired value would be. We take a list of the repairs that you're going to do to a house, and then we turn it over to an appraiser, and they do an appraisal based off of those items being completed. Once that is completed, then we take 70% of that amount, what it would sell for, and that's what we base the loan off of, is up to that amount. So we lend you all the money to buy it and all the money to fix it up long as you're under that 70%. If you're going through a bank is going to lend you based on what you're paying for the house. If it's an investor house, you're going to have to put down 20% at least, and in some cases 25, right?
That's if they'll lend it to you at all.
Yeah, because it can't need work, right?
Yeah, if there's too many repairs that need to be done, they won't do the loan at all.
That's exactly right. And that is the key is, bank financing is great. The interest rates are low. It's something you can stay in long term. If you're a buy and hold kind of person and you want to get a bank loan where you're going to buy that house and rent it out, and your repairs may only be, $5,000 or maybe even $10,000. It's not worth it really to get a hard money loan for something like that. You're better off using your own cash to go ahead and do those repairs. And of course, it depends on how bad those repairs are. If you're replacing cabinets or fixing up countertops and that kind of thing, that's fine. A bank doesn't care about that. They don't like holes in the ceiling, right? Floors that
definitely not in the roof,
right? The roof, that kind of hurts.
Ceiling's okay.
That's right. They don't want to see bathrooms that have been leaking for 20 years and there's a hole in the floor, the bathtub will fall right through, or you've got plumbing that isn't working at all. The HVAC has to be working. It has to be livable for a bank to do the loan. You have to be able to live in it. So even the windows can't be busted out.
Don't get me wrong. You can get bank financing for a rehab house, but in most cases, it's not going to be investor financing for that unless you get a commercial loan to do it with.
Right.
And at the same time, let's talk about time.
Yeah, it takes banks just a little while longer to do a loan. You're looking at 30 to 45 days for them to underwrite and get that loan closed, where hard money, it's 2 weeks or less. That's the key. The thing about hard money is the speed and being able to get the money for the repairs on that house, right?
And back when it was a buyer's market, it was okay to take longer because people weren't buying houses up like they are now. Now inventory is really tight.
Right.
And you're competing with cash buyers that can just write a check tomorrow.
That's right.
So you have to get the hard money loan. I want to mention one thing. You keep stressing high interest, and it is a high interest loan.
Yeah.
But it's also interest only loan.
Yes.
And the interest is based on 12 payments. It's an annualized loan. So you're talking annualized, meaning throughout the year.
Right.
So there's 12 payments. So if you had a 12% interest rate and you only made 6 payments, what's your interest?
Yeah.
How much interest did you pay?
It would be half of whatever that 12
would be 6.
was, right? Yeah.
So it's not as high as you think it is, but the rate of interest is high.
Yeah.
Again, it's speed. If you
And
kept
there's
it for
no
12
prepayment.
months, it'd be 12%.
Right.
If you kept it 6 months, it'd be 6%. Guess what? If you knocked it out in 3 months,
Woohoo,
you
we're
just
glad
paid
for you.
3%.
That's right. That's exactly right. That's exactly right. You're bringing less money out of your pocket when you do a hard money, right? For a bank, you're going to have to put that down payment, usually 20% for an investor loan, in some cases 25%. But with a hard money loan, with us doing a hard money loan, the only thing you're bringing to the table are the closing costs. About 7 to 8% of the total loan amount is what you're going to bring. There are some hard money companies out there that will lend you maybe 90% of your purchase price and 100% of the rehab, or they might lend you 90% of the purchase and 90% of the rehab. It really depends on the hard money company, right?
And yeah, and in reality, we might require you to have 10% down. It depends on the deal.
It might be far out in the middle of nowhere.
When you're doing a hard money loan, we look at everything globally.
Mm-hmm.
Your income, the assets you have, the money that you have in the bank,
Mm-hmm.
your credit.
We care about your ability to pay it back.
The property itself. We're looking at all that, and we're making a risk assessment on the entire project. And if you're off a little bit over here, you have other things over here that can make up for it.
That's right.
And sometimes we have to make a deal.
Yeah.
It's a little bit outside of our comfort zone.
Comfort.
It's a little bit outside of our comfort zone.
That's a really small town.
So we'll make up for this by perhaps you bringing a little bit more money.
Right. Or, yeah. So if the population is really low, which means if we have to take it back tomorrow, remember that's how we think.
Right.
If we have to take it back tomorrow, it's going to be harder for us to sell it because there isn't as large a target market in Podunk, North Carolina, as a Comfort, North Carolina. That's right. As opposed to, being in downtown Charlotte. It makes a big difference as to where that's located. The other thing that we really care about is your ability to pay it back. We're underwriting the borrower just as hard as we're underwriting the house itself. So we care about that. That's what we care about. Other hard money lenders are the same way. We've all kind of got thought in mind is, how long is it going to take us to sell this if we have to take it back tomorrow? We all kind of think down that same path. And, although we require payments on a monthly basis because we want our borrowers to have to write a check every month. We want them to really think about, hey, I'm paying for this. I need to get this house finished and get out of this loan. There are some lenders out there, though, that won't require you to make a payment during the time that you have that loan. And they're going to allow you to pay it at the payoff. Understand you're probably going to pay more on an interest rate, and they'll probably lend you less money, but it might be something that works for that particular deal that you have, right?
Well, we want you to have in your head, I need to get this done quickly, because the longer you keep a deal or a loan out there working, the more overhead you're paying.
That's right.
Right? So there has been instances where we've had people say, for example, I'm not going to take this offer because I can get $1,000 more.
What are you thinking?
They didn't take the offer, and it took them 2 more months to sell it.
That's right.
And it cost them $3,000 more.
Yeah, but they made 2,000 more.
But they got that price up $1,000.
Bird in the hand. It's a bird in the hand.
So one of the things we love to encourage people to do is to look for private money in your local market or from your local sphere of influence.
Yes.
Private money is going to be less expensive than working with a hard money company like ourselves or anyone else, because we have a business.
Bank.
We have overhead. We have employees. We have to make a living. A private lender, in most cases, is going to be someone who has an IRA. They're looking for a greater return. They can lend that money to you. That said, most private lenders do not have infinitely deep pockets.
That's right.
And eventually they're going to run out of money,
right,
or there's an opportunity that comes along the line. And this is why we tell people to use hard money instead of their own money or a bank, because opportunities come along, and if all your money is tied up in another deal, you can't take advantage of the new one that comes up.
Right.
And having hard money lenders in your back pocket allows you to scale your business. If you had, for example, $100,000 and you can use 25,000, 4 times, right?
Yes.
On 4 different houses, or you can use $100,000 on one property, which one is going to make you more money? Even if you're paying finance charges and interest and whatnot.
That's right.
Well, obviously it's going to be the 4 that you can get.
Right. And you said something really important that it's.
I did?
You did. It was
Wow.
just one thing. So
I hit my quota.
It's having, you said hard money lenders in your back pocket. I don't really love that term that he uses. Really, it's about a relationship. It's you need a relationship not only with hard money lenders, but you need a relationship with private money lenders and a relationship with banks. It's important to use all of those options when you're investing. Sure. And what I think is really cool is houses, or investments, I should say, they all have their own little personality. Yeah. They all have their own little deal. It might be a great seller finance deal, right? Where the seller's willing to finance a good majority of it. You use a private money lender to put down the down payment, share that down payment with you. There's so many different ways that you can put a deal together, and it just matches whatever works for that particular property.
Yep. And take the opportunities as they come, and you're choosing the opportunity that makes the most sense for that particular deal.
That's right. And really, well, how do I find a private money lender? It's not like they have websites, and they don't. So really the best way to meet people like that is get involved in your local real estate investor group, whether it's through the national RIA or meetup groups that you have in your city. I lead a group in Charlotte that's been going on for 17 years now, called Sunrisers. It's a faith-based group. We have anywhere from 50 to 55 people that show up there every week for breakfast. And we do a 5-minute devotional, and then we have somebody coming in and talk about real estate.
Hard money loans.
Yeah, well, that too. But like this past week, it was based on IRAs. This week coming up, it's going to be somebody that's doing multi-unit properties for college kids. So there's just
student housing.
Yeah, student housing. I knew it had a professional word. That sounds so much better. So, and we'll do one on short-term vacation rentals or executive rentals and commercial buildings, all kinds of stuff like that. And you host a group once a month, right?
Yes, it's called the Rock Hill group.
Yes. And he serves pizza.
It's the Rock Hill subgroup of the Metrolina RIA, and we have it once a month. And we have a pretty good crowd. We have it in our conference room. There's typically 15 to 20 people come. And I encourage you to get a T-shirt printed that says, "Need money." And then if you have money to lend, get a T-shirt that says, "Got money."
Yeah. You got to ask, right?
Yeah.
You got to ask. So
but
those are just
keep in
two
mind,
options.
You go to your first meeting to meet somebody and you're asking for money, you're not getting any money.
That's right.
And everything you do in real estate, well, any business for that matter, is relationship.
Absolutely.
Unless you're selling products on Amazon,
yeah,
it's a relationship business.
That's right.
And people need to get to know you. Don't rush it. Don't push it. Learn as much as you can. Get to know folks. Let them get to know you, and you'll be amazed at the opportunities.
That's right.
That come our way. The only thing else I'd like to add on the difference in the bank loans is the amortization.
Yeah.
So with most hard money loans, they're going to be similar to a line of credit, although it's not a revolving line of credit. They're still both interest only. And your bank loans are going to be, fully amortized, which means a certain amount of money is going towards payment, a certain or towards principal, certain amount of money is going towards interest. When you're dealing in a line of credit or a hard money loan or a private lender, you're not paying any principal. You're just paying interest. And then when you refinance or when you pay it off, you're paying all the principal back at one time, plus any interest that you owed in the meantime.
Right. And check for prepayment penalties. That's really an important question to ask.
The vast majority of hard money lenders on residential loans are not going to have a prepayment penalty, but you still need to look. It is more typical on a commercial piece of property,
Mm-hmm.
a multi-tenanted, let's just say office building or mixed use or self-storage or multifamily, they are typically going to have a prepayment penalty.
Right.
So that's something that you need to look at before you make any deal.
That's right. And
Right.
I always push seller financing. If you don't know if you can get seller financing unless you ask, you need to find out what the seller is going to do with the money. And you don't know that unless you ask. So again, it's about even building a relationship with the person that's selling you that property or that building or what.
About finding out about seller financing. If I wrote you a check for $100,000 and I put in a pile of if I put $100,000 cash there on this table,
would it be there next week?
Would it be
that
there
was John Groom
next year? That's right.
Yeah, it was John Groom,
our CPA in business coach.
Yeah.
And after they chuckle about it and they say, well, I'm using it for my kids' tuition or whatever.
And I only needed $20,000 for that.
Yeah, I mean, it could be you could be making them payments.
That's right. That's
anyway.
right. There's always a way to put into place the best option for the financing for that particular house.
Absolutely.
There's no one way to get it done.
So did we cover everything you think?
I think we did. So if you liked it, like us, please, right? And
Yep.
Subscribe.
What's the website?
To our Carolina
Hardmoney.com. Subscribe to our podcast. If you haven't already, share on your social media.
Tell all your friends.
Yep. And the next show that we're going to do, we are going to cover what?
How we help investors.
No, we're going to talk about IRAs and the best place to put IRA money.
I don't want to talk about IRA money.
All right,
no, I'm just kidding. We'll be happy to talk about IRA money. That'd be a great one.
Yeah. All right. Because there's a lot of different
There's a ton
strategies involved in IRA money, HSAs.
That's right.
Coverdale accounts.
Yeah.
There's all kind of stuff that can be self-directed that people don't know about.
That's right.
And one of the things you find if you want to become a lender, and by the way, we're happy to teach you how to become a lender. And one of the things you have to know as a lender is all about IRAs.
And how they work.
You have to be almost as much of an expert as the IRA custodian is.
Or us.
That's what I was saying.
That's right.
Anyway, it was a lot of fun. Thanks again for joining us.
Subscribe,
like CarolinaHardmoney.com.
Hi, if you really like this show, what you can do is you can check out some of our other shows that might or might not pertain to it. You can check up there. You can check over here. You can check down here. Check it out. Don't be afraid to like us, right?
Subscribe.
Do that too. Subscribe to our page and hit like. We'd love to have you do that. Thanks.